Welcome back. As promised, this is our special segment, Quarter Se Quarter Tak, and Abhishek is here today to take us through expectations from the NBFC sector and what you can look at this quarter around. Abhishek.
Well, non-banking financial companies, that is NBFCs, are expected to report a strong Q4 FY23 in terms of results, driven largely by higher disbursements and recoveries despite the potential impact of rise in interest costs or interest rates on their net interest margins. So there is a strong underlying consumption demand seen across segments of housing, vehicles and consumer durables, which is likely to support the disbursals trend for NBFCs. Housing finance companies are expected to report growth in the low to high teens with stable net interest margins, and SDFC Limited and Canfin Homes are expected to report good numbers. So commercial vehicle is the other sector which is expected to report strong growth in mid-teens, that is 15% to over 25% due to strong disbursements. Gold financiers over there, you can expect the pickup to sustain in this quarter in terms of quarter-on-quarter growth rate, with Muthoot Finance expected to report positive sequential growth, while Manappuram Finance is likely to report negative growth on a sequential basis. Consumer finance is expected to report better the growth given the fact that there is improved macro seen in Q4 with no asset quality woes expected, but there may be some pressure on the net interest margin. So according to key estimates by Antique, SDFC Limited is expected to report net interest income at about 4,929 crore, which is up 5.1% YOY and about 0.3% sequentially, and they are expecting profit of SDFC Limited to be up 1.1% YOY and about 1.4% sequentially. For Bajaj Finance, they are expecting net interest income growth of about 26.9% YOY and 3.5% quarter-on-quarter, while profits of the lender is expected to grow at more than 26% YOY and about 2.6% sequentially. For Cholamandalam, Antique is expecting net interest income growth of about 20% YOY and 1.7% sequentially, while they are expecting the bottom line growth of 0.3% YOY and about 1.1% sequentially. For Muthoot Finance, Antique is expecting net interest income growth of about 10.4% YOY and about 10.6% sequentially, while profit is expected to decline by 0.4% YOY but be up about 6.1% quarter-on-quarter. Back to you.
Okay, thanks a lot for that. Well, Nischint Chawathe, who's the senior analyst at Kotak Institutional Equities, joins us now to tell us what to expect. Nischint, you heard Abhishek out. Tell us what is your, in the coverage universe that you have, which are the companies where you're expecting to see growth? What is the what is the stock price recommendation this time around?
Thanks. Generally, non-bank finance companies will report a strong quarter. If you look at the last 3-4 quarters, the overall momentum has been strong. Typically, fourth quarter is seasonally a strong quarter. So obviously, you have got both the factors working on your side. Some of the companies have already put out their, business releases. And, if you notice, they are kind of, using terms like all-time best, all-time highest. And I think that's an indication of how this quarter is going to be, not only for these pairs, but probably across, across the board. You would probably expect loan growth to accelerate further, anywhere in the range of around 30-35% for the likes of Chola, to even for some of the, for some of the smaller players to be, in the range of around 10 to 12%, which is kind of a steady acceleration. We are positive on the vehicle space per se. Chola is, has been our, favored pick. Here you can see that this is a business where you are enjoying the tailwinds from the vehicle business, plus you are adding new product lines, which is sort of helping your both growth and profitability. Mahindra Finance, at a very interesting juncture right now, a very strong year. Plus, coupled with the fact that there were certain concerns on this company if they could comply with the new RBI NPL norms, and now it is more or less clear that they are able to sort of do that. So you should probably see momentum remaining strong here as well. And Shriram Transport is again the company has just kind of completed a merger. And I think on that base, market is not expecting any synergies, expecting business performance to be flattish. And our sense is that, given the way the macro is, probably you would see improvements here as well. So these, the entire vehicle pack remains our favored pick out here.
All right. Hi, Nischint. Good morning. Thanks so much for joining in. What about the gold financiers? They were losing some market share. Now they've come back with the increase that we have seen in gold prices, maybe moving in sympathy. But what's the trajectory from here on? Because on that high base, growth hasn't really been coming about. Your view on them and what's your preference out there?
Sure. See, there are two parts in gold segment. One is the lower ticket part, which is catered to by NBFCs, and larger tickets where I think you can start seeing competition from banks coming in. The larger ticket parts where there is competition from bank, I think that part remains similar. It remains as competitive as the 6 months back. The lower ticket part where there were only NBFCs, in this segment, you have seen that yields have gone up, and I think you will see improvement in margins to that extent. So are we better off than what we were, let's say, 6 months back? The answer is yes. But clearly, I think you do see competition from the banking side in the higher tickets. We have we have a coverage on Muthoot over here, and we have liked this name. Gold prices being what they are and the kind of appreciation that you have seen over the last 2 months, one is saying that this quarter should be very good in terms of loan growth. So that is loan growth as well as margin. So that's something which works for this quarter. But frankly, you should look at steady improvements in this business unless and until, and the big turning around point would be when banking competition slows down. Our sense is that many of these new lenders who have come into the market, they have not seen a gold price down cycle. The real test will be when gold prices come down and, come down significantly in 1 quarter or so. And that's where I think the risk management systems of some of these newer players and newer competitions will be tested. And that's where we believe that the traditional gold financiers will kind of make a comeback, because these companies have proven themselves through, multiple cycles.
So those who are holding on, hanging on to Muthoot, what's the recommendation, Nischint? Although, before the gold prices come off, the overall consensus seems to be that gold prices perhaps drift higher even from here. The last time I think the Muthoot management was with us, which is not very long back, they said AUM growth is going to go back to 15%, from what I remember. This is, I think, they were guiding for next year. So a quick one, Nischint. Hold on.
Yeah, sure. So we would clearly be, hold on. We would say that this is a good opportunity, even if you're a long-term buyer, because there is pessimism at its peak, expectation that, competition is just going to sustain over here. Obviously, gold prices, kind of move through cycles. So there will be a phase in which I think some of the newer companies will put through testing time. So for a long-term buyer, I think this is a good time to really enter the stock. If you are an owner, we will continue to hold on to this for sure.
What about the other big one, Bajaj Finance? Nischint, will it, lots of questions, right? Again, performance has been superb for so long, and now a little subpar over the last year and a half or so. Stock performance, that is. Growth rates have also come off, to be fair. They're not what they used to be. So what's the sense there, Bajaj Finance?
Yeah, so our sense is this could be a steady compounder from here on. I won't expect re-rating in the stock, but I should say it could be a steady compounder from here on. This company has been guiding for around 25% growth, but consistently delivering 30-35. And I guess the market expected them to sort of continue to deliver 30-35% growth. When we got a sense that this year should not be that superlative kind of a growth, I think the stock corrected. From those levels, our sense is obviously you don't go down from 30% to 20% like overnight. So can this company sustain a 25% sort of a loan growth? The answer is probably yes. And you should expect a steady compounder, but don't expect a re-rating from these levels.
All right. Thanks a lot for joining in, Nischint. Appreciate your thoughts. By the way, I just wanted to